is Pavel Matveev. I'm CEO of Wirex. It's a pleasure to be here. And today we're going to talk about how we can use digital assets, cryptocurrencies, virtual currencies in everyday life. We also will talk about different problems or issues current industry has, and we also will talk about stablecoins, which is quite a trendy topic nowadays. I'll start with an introduction. Just a quick question. Does anybody in the audience know what Wirex is? If you do, raise your hand. Okay. Few hands. So I'll start with introduction. It might give you some context. Wirex is a London-based fintech company established about 4 years ago. And at the moment, we are the global leader of so-called cryptocurrency debit card market with almost 2 million customers in more than 130 countries. What is cryptocurrency debit card market? Basically, it's a regular Visa multi-currency card, which is linked to your traditional fiat accounts and cryptocurrency accounts. And this card allows you to use your digital assets in existing payment or card infrastructure, which is 40 million of merchants in more than 200 countries. We are backed by SBI Group and SoftBank. It's large Japanese financial institutions. We are regulated in UK by UK FCA. We're also regulated in Canada and Singapore, and working with regulated partners in Japan and United States. The thing you need to know about us, we are not an ICO company. We have nothing to do with this part of blockchain or cryptocurrency ecosystem. Okay, let's start. 95% of use cases at the moment for digital assets or cryptocurrencies is speculation or trading or investment. It's not what we're going to talk about today. So I will be talking about using digital assets in payments. Different payments, cross-border international payments, everyday payments, machine-to-machine payments in the future. So let's start and talk about benefits which cryptocurrency or digital assets can give us or can bring into existing payment ecosystem or infrastructure. I will be using Bitcoin as example because most of the examples are relevant for other cryptocurrencies, maybe not so relevant for privacy-focused cryptocurrency or currency with privacy features, but anyway, it's relevant for 95% of all digital assets. So my first statement is Bitcoin is the most traceable currency in the world. People new to Bitcoin might think it's totally anonymous, but in fact, all transactions are recorded on a blockchain and publicly available to view online, which is excellent for fighting with corruption, which is excellent for fighting with money laundering and so on and so forth. So basically, all your transactions, because all the blocks are connected on a blockchain, so we can always track where these particular funds are coming from. So there are a couple of companies on the market which build analytical tools on top of this feature, like Elliptic or chain analysis. If you're in doing payment business or cryptocurrency business, you're probably familiar with these names. But what you can do using these companies or this technology, you can assess the risk of deposit and transfers because as I mentioned, all crypto transfers are transparent. My second statement is about micropayments or machine-to-machine payments. We slowly move into the era of connected devices. By 2020, there will be 25 billion of connected devices. I think IoT is a quite hot topic, so everybody thinks, okay, in the future there will be billions of connected devices. And the thing is, all this, so connected devices, basically any device connected to the internet, smartphone, smart TV, smart whatever, smart fridge, if it exists maybe. So in the future will be more smart devices. And I think a lot of people understand, okay, at some point these devices need to communicate and do micropayments between one and another. So there is a term for that. It's called machine-to-machine payments, or M2M. But think about M2M, it's all micropayments and microtransactions. And unfortunately, you can't do micropayments on a global scale with traditional banking instrument. It's too expensive, it's too slow, and it's not scalable. So virtual currency or digital assets is a solution for machine-to-machine payments. Again, this industry will be quite big in the future. Another feature of cryptocurrency payments, that all the transactions are irreversible. What it means, there is no chargebacks. Again, there is a pros and cons of that, but again, no chargebacks means good thing for merchants. Chargebacks is a huge problem for all merchants accepting cryptocurrency debit cards. Again, if you're in this business, you're probably familiar with all the chargebacks issues, with rolling reserve issues, and so on and so forth. So if you use digital assets, it's peer-to-peer, there is no chargebacks. And in our business, we see a huge demand from small, medium businesses, especially doing international sales. So for them, accepting crypto is a solution. And digital asset like Bitcoin is excellent for cross-border and international payments. Again, if I have Bitcoin, I can send Bitcoin or XRP or Dash to people everywhere in the world. I can send funds to people in Africa where people don't have bank accounts and they use mobile phones to send and receive payments. So this is the benefits cryptocurrency or digital assets have in in payment industry. So the question is, so if crypto is that good, why people don't use it in everyday life? Why no any bank, or maybe just a couple of banks, using digital assets for payment industry? Why 95% of all use cases is just speculation or investment? Well, the answer is very simple. The thing is, you can't really use Bitcoin or any other digital assets in everyday life. I can't go to Starbucks and buy a cup of coffee with Bitcoin. It just doesn't work because merchants doesn't accept crypto as a payment option in most of the countries. They do now in Japan, but I will talk about this a bit later. But this is the main problem for cryptocurrency adoption. Again, there is a lot of benefits, but reality is that you can't really use crypto in everyday life. If you can't buy things or pay for services with crypto, it means it won't reach mass adoption, unfortunately. In fact, 0.3% of all merchants in the world accept cryptocurrency. It's mainly Bitcoin. It's definitely not enough. Bitcoin has other problems, especially with scalability, time confirmation, and so on. So it's not happening. Right now, we can't, unfortunately, use crypto to pay for things. And let's talk about possible solution for such issue. So it's a Wirex application, but I'll explain you the idea behind it. So what if instead of convincing all the merchants in the world, millions of merchants in the world, to start accepting cryptocurrency, we can use existing payment or card infrastructure, which is, again, it's 40 million of merchants, 200 countries. It's a lot of people, and it's a lot of shops, merchants, and so on. So, and exactly what we're doing, and not just we, it's quite trendy nowadays using the card to help with adoption. So the idea is very simple. You have a card, you have your accounts, which is linked to your digital assets. Again, it works as your traditional banking cards, as a contactless, support 3D secure or any other features. And it allows you to use your digital asset, Bitcoin, Litecoin, XRP, whatever you want, in everyday life. We also give you a bank account with application. So it's if you're in UK, it has unique sort code and account number. If you're in the rest of Europe, we give you IBANs and 25 currencies. And if you think about this, so I mentioned remittance, so cross-border payments is one of the use cases, and the digital assets are good for value transfer. Again, I can send value from one country to another, from one continent to another. Okay, that's cool, we just solved the remittance problem, but the person on the other hand still can't use it, right? So it doesn't really work. So that's why this kind of technology or cryptocurrency debit card is the last mile solution for cryptocurrency remittance or blockchain-based remittance. Just another slide illustrating how it works. Again, it's a multi-currency card linked to cryptocurrency and fiat accounts on in one application. So our idea is very simple. I think a lot of companies trying to overcomplicate cryptocurrency. It's scary, it's too complex, and media helps as well. So media loves to associate Bitcoin with ransom and crime. So a lot of people from general crowd were a bit afraid of the complexity and just the a bit dodgy reputation of crypto assets. And our approach is slightly different. So we don't actually differentiate crypto and traditional currency. So you have everything in one application, and it's up to you how you want to keep your funds. Everything in crypto, okay, that's fine. Everything in fiat, it's good as well. So it's up to you. We give you a choice, and how you deal with your funds, it's your choice. And you can use a card as an instrument to spend or to use your funds everywhere. Let's talk about another real-time use cases. And let's talk about loyalty point industry. It's a huge industry. So 50 billion is size of its annual size of loyalty point market. But think about loyalty points. So people saying cryptocurrencies, it's very new technology. Virtual currency is new technology. People don't understand how it works. Well, reality is loyalty points is a virtual currency. And we all have a lot of loyalty points here and there. Airline miles, points, some points in I don't know, in Starbucks or some other places. The fact, I've got a couple of facts about the industry. So it's a huge industry, so 50 billion annually. Another interesting fact is that only 1% of all loyalty points are redeemed. And the reason for that is that loyalty points, they are not exchangeable, they are not spendable. A lot of us probably have points, some points in one place and other points in another place. I can't buy airplane ticket with my coffee shop points. It just doesn't work. So one of the problems, low redemption percentage, and another point, there is no universal loyalty point. And concept is very, if you think about this, loyalty is a virtual currency. So what if you, instead of loyalty points, you can give a cryptocurrency, right? Because cryptocurrency doesn't have such problem. It's exchangeable, spendable. Well, and it might grow in the price over time. Maybe not right now because it's what people call crypto winter, so everything goes down. But, well, we're trying to be optimistic, and crypto can go up in the future as well. So, and here I'd like to share a couple of insights about what we do in Wirex. So we have crypto-backed reward program. We call it crypto-back. So the idea is very simple. Every time you use your Wirex debit card, we give you 0.5% back in Bitcoin. So instead of loyalty points, instead of inventing our own coin, we give you very liquid cryptocurrency, which is Bitcoin. And we So it's 0.5% on every in-store purchase. It's exchangeable. Again, you can spend it with a card, you can pay it, you can send it to whoever you want. And very interesting insight about this technology. So most of our audience, it's what we call cryptocurrency enthusiasts, so people who are more or less familiar with cryptocurrency. But once we introduce the crypto back, we see a very interesting trend. So we see a lot of people from general crowd who are not familiar with crypto, who is a bit afraid of crypto. They started using our card as their primary card just because of a crypto back. So if you think about this, a lot of people not IT savvy, they're not familiar with crypto, they're a bit afraid of crypto. But with this technology, with crypto back, you can own crypto without buying crypto. And again, we see a lot of people from general crowd who just use us as their primary banking card where they receive a salary. And it's, again, going back to my point about giving people a choice. It's not all about 100% crypto, let's reinvent payment industry. It's about combining the best things of two worlds, the trust of traditional payment ecosystem and all this new feature of exciting cryptocurrency and digital world. Let's talk about challenges crypto assets on digital currency currently have. I think a couple of them, the previous speaker mentioned probably this slide, and it basically illustrates transaction fee for Bitcoin. And you can see this spike in January. It's when Bitcoin was 20,000 per one Bitcoin. This graph illustrates that there is a problem. And the problem is that most of the digital assets were not scalable. Once there are a lot of transactions, once price of crypto going up, well, the people pay a lot of fees for transferring value. So on this graph, for example, in last gen, the price for Bitcoin transaction was around $35, $40, right? So forget about micropayments, microtransactions. It's not going to work with this fees. So fees, it's relevant not just for Bitcoin, but for most of it cryptocurrencies. Again, there are some cryptocurrencies saying, yes, our fees are low, but look, your price might be low as well. So, and if the price going up, there is always limit the block size. There is always limit on how many transactions you can handle and what fee is going to be. Talking about the transactions, again, just before we're talking about transactions, the one slide illustrating machine-to-machine payments. Again, I mentioned IoT is a big thing. Big data IoT, I think is a buzzword, but it will be big going forward. This graph shows how the number of connected devices, all the smartphone, TVs, all other smart devices are growing with the time. So very soon we will reach 25, 30 billion of connected devices. So IoT is getting bigger, IoT is getting real, and machine-to-machine payments is getting more important with IoT as well. And when we're talking about, again, micropayments, microtransactions, we're talking about huge number of transactions. And unfortunately, this graph illustrates, again, probably slightly duplicates the previous speaker, but it highlights the problem. Current digital assets, most popular digital assets, not all assets, but Bitcoin, Ethereum, for example, you can see the comparison with PayPal and Visa. It's a huge difference. So if we're saying, okay, we want to replace, reinvent existing payment infrastructure, well, Bitcoin needs to be more performant, more scalable, and faster to do that. There are some digital assets like XRP which can handle millions of transactions, but again, most of the assets have a scalability issue, and They have a limitation on how many transactions they can handle per minute, per second, whatever. And we talked about the issues, so scalability, fees, limit on transactions, and let's talk about solution. So again, I will be using Bitcoin protocol as an example, but other cryptocurrencies like Ethereum and other have a similar solution. So I think it's where things are getting a bit technical, so I'll try to explain it in plain English. So why cryptocurrency is not scalable? Because it's based on a blockchain. I think about blockchain, it hasn't been designed to be scalable. Blockchain solves different problem. Blockchain is immutable, so immutable means it can't change. You can't change the block once it's there on a blockchain. And the second benefit, the second goal of blockchain is it's globally distributed. So it's globally available, people from all over the world can access the data. Given these two goals, it wasn't designed to be scalable. So it's why there is a limit on how many transactions, how many blocks it can handle, what the size of a block, so on and so forth. But there is a solution how we can scale blockchain. The idea is very simple. Instead of doing everything on a blockchain, we can handle transaction or process transaction off-chain. It's what Lightning Network is about. So it's a off-chain, or sometimes it's referred as a side-chain solution. So again, the idea is very simple. We can process millions of transactions off-chain and then publish a final result to a main blockchain. By doing that, we can scale blockchain, so we still can process millions of transactions, and still we can put the final result on the main blockchain. So it's still there, but it still allows you to process millions of transactions per second. Again, there is a couple of technical terms here on the slides, like micropayments channels. It's basically building block for Lightning Network. So when we do this off-chain connections, we create or we set up as a bi-directional payment channel. Let's have a look what benefits Lightning Network can give us. So first of all, because it's off-chain, there is no confirmation time. You don't need to wait 10 minutes, I don't know, 1 minute, whatever. It's instant. Again, excellent for settlement time, huge opportunity in machine-to-machine space, or anyway, instant settlement is always good. Scalability, because it's off-chain, it doesn't have limitation of a globally distributed blockchain. It can process millions, billions of transactions per second, per hour. It's low cost, again, because there is no mining, there is no mining fees, there is no miners involved in this process, there is no fees. Again, good for micropayments, microtransactions. And it can be cross-blockchain. So Lightning Network, if you're familiar with a white paper, or maybe heard about this, it can work across different blockchains, which basically solves all the cryptocurrency or digital asset problem in payment space. I mentioned Bitcoin, I use Bitcoin as example. So Ethereum has a similar concept. Other digital assets have a similar concept as well. In Ethereum, it's called Plasma. It's pretty much the same thing. So it's off-chain solution. We have our own implementation in Wirex. It's called WPay. It's the same principle, off-chain solution for settling different cryptocurrency with tokenized fiat. So it's instant multi-currency payment solution, can be fully automated, excellent for existing infrastructure if you integrate in via API, or it's excellent for M2M payments, zero fees, and there is no chargebacks as well. Let's move into the final part of the presentation and talk about stablecoins. So stablecoin is quite, I would say it's a trendy topic nowadays, especially with all the issues USDT have. So USDT is the biggest USDT token, basically. It's the biggest stablecoin on the market right now. With all the issues USDT have right now, we see the rise of stablecoins. There are different type of stablecoins. Just before I go to the type and explain the difference, so why stablecoins are important for ecosystem or for the industry? There are a lot of criticism around volatility of digital assets. And if you follow in the prices, for example, today we have like plus 10% in most of the cryptocurrencies, Bitcoin, Ethereum. Well, yesterday we had minus 15%. And when we're talking about volatility, when we're talking about payments on a global scale especially, volatility makes sense. So the asset should be not that volatile if you want to use it in payment space. And it's unfortunately not the case right now for most of the cryptocurrencies. So there are different types of stablecoins. There are 3 of them. So traditionally, the stablecoins using traditional collateral, using crypto collateral, and using different algo strategy or different algo logic behind it. In my opinion, I do believe stablecoins which backed by traditional fiat will be quite popular. It's popular right now, but it will be quite popular next year as well. So how it works? I have a token on a blockchain. Again, I will be probably using USDC, for example, the coin which was launched by Circle and Coinbase via an organization called Centra. But the idea is very simple. I have a token on a blockchain. It might be RC20 token, it might be something else. It doesn't really matter. And I have equivalent in fiat sitting in my bank account. So the banks are meant to be audited or checked on a regular basis just to ensure the money are there. So I've got the money on my bank account, and I've got exactly the same amount in tokens. If somebody depositing more money in my bank account, I'm issuing more tokens. If somebody withdrawing money from my account, I'm removing tokens from ecosystem. And what we have tokenized fiat currency, which have all the benefits cryptocurrency have. You can send it everywhere in the world. It can be scalable. It's good for micro transaction and so on and so forth. We'll talk about use cases in just a second. This is, again, the quick overview of different stablecoins. There are around 35, 40 right now. Some of them exist only on white paper, which is, again, probably quite common thing in current cryptocurrency ecosystem. But the point is, there are not just one, but there are several of them, and there will be more going forward. Most of the stable coins are focusing about USD, so it's basically tokenized fiat currency. So this is another slide showing the market value. You can see the USDT is the biggest. True USD is quite big. I think USDC, it's a Circle coin I'm missing on this slide. It's getting quite big right now. So I think it's similar to, even bigger than True USD right now. Let's talk about different use cases for stable coins. Again, so stable coins, you can think about is tokenized USD, tokenized GBP, tokenized Euro, whatever. So it's an excellent medium of exchange. So people actually, or businesses or merchants, they don't need to exchange or to use Bitcoin as an intermediate currency or any other currency. They can use actually tokenized fiat. Again, it's an excellent unit of accounts because most of the accounting is done in fiat currency anyway, and it's quite easy to transition from fiat currency to tokenized fiat currency. It's not a big deal. Distributed application is a quite big use case as well. So distributed application, smart contracts running on a blockchain, and they need some form of digital money to accept payments, to do payments, to interact with each other. And again, stablecoins can be a good solution for that. Store value, performance measurements, good use case for stablecoins as well. I'd like to mention remittance. So the thing about remittance is that a lot of cryptocurrencies are saying that, well, or even I was saying in my presentation, so Bitcoins are good for value transfer. Well, it definitely is. Can send Bitcoin to anybody, anywhere. That's cool. And well, the problem, they still need to convert it in local currency. So this is all problem of all cryptocurrency-based remittance. And what if you just send a stablecoin, and what if you just convert it to stablecoin, and you don't have this issue of converting Bitcoin in Mexican peso on Brazilian real locally, where you need to source liquidity, when you have different regulatory issues and different compliance requirements. Derivatives lending, another use case. Again, it's actually the most popular use case for stable coins right now. So on a lot of exchanges, which is kind of digital exchanges like Binance or OKEx, where you can't really deposit fiat currency, a lot of traders use stable coins to hedge the risk or to hedge the position onto the market is volatile, where they usually go from crypto to traditional stable coins. So for people, I have a slide for people who are a bit skeptical about future of cryptocurrency payments or cryptocurrency industry. So this is, I took this photo in Tokyo. It's in big camera. It's a big retailer, which mainly focusing on gadgets, on different devices, and I don't know, TV, smartphones, so on and so forth. So you can now use Bitcoin or other currency to pay for things and services in Tokyo, not just Tokyo, in Japan. The thing about Japan, so again, Japan is very interesting. It's a very close country, but it's also a country with two big hacks. So MTGOX, it's for people who don't know, it was a Japanese exchange, one of the biggest hacks in the world. After that, they decided that they need to regulate cryptocurrency. We were in Japan and Tokyo before regulation, and we actually saw how regulation affected financial landscape. So the main idea of regulators or government was to protect customers. So, well, MTGOX happened, right? And they wanted to protect cryptocurrency or cryptocurrency enthusiasts from this, and they introduced cryptocurrency licenses. So if you do any cryptocurrency exchange in Japan, your business has to have a license right now, which is quite long process. So they introduced a license, market became regulated, it was booming, all the big players, bank, FX brokers. By the way, Japan is the biggest FX market in the world. All the housewives doing FX trading, so cryptocurrency trading was quite popular in Japan as well. So they introduced regulation, market was booming, everybody was happy and doing cryptocurrency business, and then CoinCheck happened. So CoinCheck is another Japanese exchange which were hacked by $500 million. And after that, it's becoming very difficult to get a license, so market in Japan is stagnating a bit. But it's not the point. The point is that there are more than 10,000 shops, restaurants, and places in Tokyo where you can use digital assets or cryptocurrency to buy things and pay for services. And also, Japan is leading kind of IoT things. We're very interested in IoT. So we probably will see some more real use cases for machine-to-machine payments in this country. So this is the end of the presentation. Again, if you want to get our card, you can just download the application. Please follow us on Twitter, Facebook, if you're interested in cryptocurrency insights. And thank you all. I think we have just a couple of minutes left. If anybody has any questions, I'm more than happy to answer them. Yeah, just.
Thank you very much for the presentation. Two very short questions. One, it's a bit more philosophical, and the second one, a bit more practical. The philosophical one, how would, from your perspective, dealing with cryptocurrencies, how, in a case of global financial crisis, how would Wirex and all the crypto environment could cope with that? And that's the philosophical one. And the simple one is, how do you deal or how do you convince merchants to use crypto in such a high volatility area in payment sector? Thank you.
So I'll start with the second one about merchants. This is a very good question. We're actually launching now our B2B product, which is mainly focusing for businesses related to cryptocurrency. Payment companies doing conversion, merchant accepting cryptocurrency as a payment option. The thing is, right now it's a young industry, it's a low competition. So for us, it's more about providing a solution rather than convincing merchants. If there is a solution which solves real problem, it's not something written on a white paper, solving an imaginary problem. If there is a technology, if there is an API solution which can solve a problem for merchant accepting international payments, well, this is kind of the best we can do right now. So we're more focusing on solution rather than on selling or convincing merchant right now. Merchant adoption will take some time. It won't happen overnight, unfortunately. And to be honest, the technology itself is quite young. Right? I mentioned a few issues cryptocurrency and Bitcoin have. It's getting better. I don't think we're still there yet. Again, there are a lot of new things happening every like six months probably. Right? So ICO was booming a year ago, and where this ICO now, or stable coins are trending now. Again, it probably will be trending for next 6 years. Well, will be maybe something different. Liquidity is growing on Lightning Network again. This might be a solution. Talking about your first question about financial crisis. So I think financial crisis was one of the triggers why a lot of people in the world started investing in cryptocurrency, or why we became interested in digital assets. There are a lot of countries in the world with problems with a local currency. So Venezuela is one of them, probably, where people sick of tired of using banks or traditional banking infrastructure, banking losing trust. So the cryptocurrency is getting more and more popular. I think it was more popular the last year when the price was surging, but it's still growing quite fast, and market is expanding. And for a lot of people, this, the financial independence in cryptocurrency is what we are looking for. Thank you.
Hello. I would like to ask how risky is your business model? Aren't you at the mercy of Visa, and can they just close you as they did with lots of smaller players in this industry at the beginning of 2018, if I remember well?
Okay, this is a very good question. So probably you're familiar with what happened in January last year when a lot of cryptocurrency a lot of cryptocurrency debit cards were shut down. So a lot of them were working with Wirex. Wirex is a Gibraltar-based card issuer. So the reason why it was shut down is not because Visa or MasterCard or any other card scheme against crypto. The issue was that this particular card issuer wasn't compliant enough, and that's why it was shut down. So answering your question, so we are UK FCA regulated. We have good relationship with both schemes, Visa and MasterCard, on a global level. So we have programs running in Europe, in Japan, in Singapore, in States and Canada. So it's not about Visa kind of decision shutting us down or not. It's about being compliant and following the rules. It's an interesting question because when cryptocurrency enthusiasts talking about their solution, they're saying, hey, we don't need banks, we don't need compliance, we don't need all these legal requirements. Cryptocurrency is the future. Well, reality is not like this, right? In reality, if you want to hit mass adoption, you need to be regulated. Or I would say, I would rephrase it, we need some sort of regulation if we want for cryptocurrency to hit mass adoption or mass market. Without regulation, there will be no trust and there will be no mass adoption. It will be niche market as it is right now.
Pavel, I have a question as a complement of the previous question. You are a fintech company. It's very interesting what you presented. But when the slide came up with the Visa card, I said, okay, this technology is maybe 50 years old. And since PayPal, I didn't see any technology in the market that enables you to make daily life payments. So question, very simple. And when will we have a solution from Wirex without any Visa card?
Well, it's an interesting question. So we have a solution without Visa card in some markets. So we can issue cards not everywhere, but we operate in around 150 countries. So we can issue cards in certain markets, not everywhere. Where we can't issue cards, people use us as a digital wallet, so easy fiat to crypto option. We're trying to focus more on the payment user experience. I think we were more, this year or previous year, we were more focusing on this kind of spending part or integrating into traditional ecosystem. You're absolutely right, it's 20, 30, 40 years old technology. Having said that, I think it's what we currently need because, again, all this cryptocurrency revolution or evolution, it won't happen overnight. So we need a kind of, the step towards the mass adoption, and the using card infrastructure is the step. Having said that, we will be, and Wirex will be focusing more on P2P, using digital assets. Next year, we preparing quite big announcement around January time, so stay tuned.
Hi, thank you for the presentation, it was great. My question is, do you think that low adoption is caused by pre-millennial fear of technology? And would regulation kind of resolve that?
Okay, so fear of technology. Well, I don't think it's relevant just for kind of millennials, pre-millennials, or some other generations. But I think a lot of people share this fear of technology, or especially fear of cryptocurrency, because again, as I mentioned, media loves to associate Bitcoin with a ransom and crime. It's getting better. I think it like 3 years ago, all the newspaper was saying, okay, somebody, drug lord, just paid with a Bitcoin, or there is a ransom in Bitcoin, so on and so forth. You're right, so this fear of technology is a stopper, but again, as I mentioned during my presentation, crypto shouldn't be complex. So one of the approaches is, again, use it on the background, it's one way, or another is just kind of make it simpler. We don't need to, overcomplicate things with a lot of technical terms to scare people. It's the approach we use. We treat crypto as another account in our system, same as GBP or Euro account in our system. So people, again, who are not familiar with crypto, it's easier for them to understand the concept. And another thing, again, I mentioned loyalty, which is a virtual currency. Loyalty points has been there for a while, and everybody's familiar with loyalty points, and this is a virtual currency. So I do believe a lot of people just overcomplicate cryptocurrency, but fear of technology, it's one of the problems we're currently facing. I think we're running out of time. Thank you all. If you have any questions, I will be around. Thank you.